Hello, I'm Troy Harmon, Chief Investment Officer for Henssler Financial. I'm joined by Nick Antonucci and Jacob Keene, and this is your market update for February 2019. So guys, three major topics in the market. We've got Fed commentary, earnings news, and PMI, which all have been very important for economic indicators for us going forward. Let's back up and talk about the Fed.
As expected, we didn't get a rate hike in January.
Yeah.
I think it was a little bit more dovish
Well,
of
the
a
commentary,
meeting than
right.
even the biggest dove expected, because what the Fed did is they introduced the idea of maybe tapering the quantitative tightening that they're doing right now.
The long-term end of rate management, I guess, if you will.
Right.
Because right now they're letting
50 billion
bonds roll off.
50 billion, was it 50 billion? We're at basically max speed right now, 50 billion a month, and talking about potentially pumping the brakes on that a bit. And they continue to say, we'll be patient on with our policy. So what does that mean for the average investor? Well, short term it might be good to see them slowing the tightening, but as you've mentioned in our conversations, long term that indicates probably a slowing.
Yeah, it kind of gives us an indication of where we are in the business cycle, and we believe that we're toward the end, the maturity of the current business cycle.
It's like the Fed saying, "We got your back," but then you have to kind of ask, "Well, why do we
have our back?"
Yeah, why do we need you to have our back?
Right.
So,
no doubt.
Near term, long term.
So second topic, earnings. The S&P 500 earnings. We're about 60% of the way through earnings season at this point.
It's been solid.
It has 14% earnings growth, almost 7% sales growth.
Yeah, 3% better than analysts would have expected as far as the surprise goes. All things considered, the news is not horrible. Obviously, we've had a slowdown from the previous 3 quarters that were over 25%, but it was expected. That was due to taxation, and we're losing that.
Yeah, and there's kind of two stories there, too.
Let's talk 2019.
Yeah, if you start talking 2019, what we have now is, if you're looking at Q1, estimates have come down. I mean, we had expectations for earnings growth of over 6% in Q1, and now we're actually looking for slightly negative Q1 growth.
Right.
And it was the biggest drop, in at least as far as the reporting, because part of what's happening is companies are guiding down a bit.
Sure.
Right.
Because we're getting in, like you mentioned, last year we had the nice tax benefit. Now we don't have that anymore, so guidance is coming off a bit, and we're seeing these analyst revisions come down, and it's the biggest since you have to go back to early 2016.
And that just means stocks, all things consistent, stocks are going to start looking more expensive.
Yeah.
You don't have that earnings growth, they're priced the same way, you're paying more for those earnings.
Yeah, the market's forward-looking, so in expectation of earnings, you'll see prices move higher generally. You start seeing that growth go away, or that growth potential or expectation go away, you see prices come down a bit. Final thought, let's talk about some PMI.
Purchasing Managers Index.
Yeah, and
Easy for me to say.
I think some of that's bleeding into, you think about these big corporations and earnings growth expectations. Well, we got global growth PMIs that are at a 2.5-year low. A slowing down in global growth, and then, guys, if we look to the U.S., I mean, it's been coming off a bit.
It has. Manufacturing was positive in the month, which is very different than what you're seeing abroad.
A bounce back from December, which was not
pretty.
Right.
And you have China declining. China's manufacturing PMI declining. Look at Europe, just about anywhere. France, Germany, all declining. We did have the services side, which is the majority of our economy here domestically, decline in the month slightly. Both are still expansionary, but like you said, you're starting to see some weakening.
Yeah, and I think if you look at the commentary from market, the folks that do these PMIs, they're saying where we're at right now is, predictive of about 2.5% GDP growth, and some of the labor numbers have come off a little bit with like 150,000 payroll growth.
Right.
So not as we had been doing 300,000. So I mean, the takeaway there, guys, I guess is it's still the U.S. kind of the strongest.
Yeah. The cleanest shirt, the dirty laundry.
Global growth is coming down, and growth in general is coming down, but I mean, we're still growing.
Yeah, and that's kind of a reflection of business sentiment. Business sentiment remains, I'd say, pretty decent, but again, it comes back to, we think we're probably, late in the economic cycle. Things are going to start to turn. You're going to start to see some cracks. So that's probably what you're starting to see with the PMI numbers.
Yep. So that's been your market update for February 2019 from Henssler Financial. We thank you for watching.